In other business news developments, industry players are highlighting the importance of insurance cover during this period of high inflation and interest rates, which have resulted in the financial stress for most consumers. Various data readings, including StatsSA, have reflected that consumers are falling into further debt and that defaults are on the rise. Infiniti Insurance CEO Sharon Paterson speaks to us about this. Thank you so much for your time, Sharon. It is for some time now that in South Africa, the likes of insurance repayments or even acquiring insurance in tough economic times has been described as a grudge purchase. Why should this narrative change?
Thank you so much for having me. I think that our major concern with insurance being seen as a grudge purchase is that in tough times, people tend then to not pay their insurance premium. And that probably is the worst thing that you can do, because when times are tough, that's when you really do need your insurance. What is my advice to clients? My advice to clients is to make sure that you insure what you can't afford to lose. It is a time when, rather than cancelling your insurance and rather than seeing it as a grudge purchase, you should be seeing it as something which can actually save your business and that can save your lifestyle. And what I mean by that is, let's look at what you buy. You know, people tend to say, well, my cell phone will get stolen or my jewelry will get stolen. But those are things that you can actually afford to replace for yourself. What can't you afford? If your house burns down, where do you sit? You then have nowhere to live. What you need to do is to chat with your insurance broker, who knows far more about structuring than you do, and structure your insurance to what you can afford. And in terms of that, you buy cover, for example, for your building. But equally important is to make sure that you cover what you do cover adequately. What you don't want to do is you don't want to underinsure at this time.
That's a very important point. And at times we found that periodically and in the trends that we've seen within the insurance space is that one is either underinsured or overinsured, because to be on the safe side, you would want to be insured for almost everything from your cell phone to your jewelry to your vehicle as well as your home. But the segmentation now of what is important and what is not becomes even more critical to minimize the cost. And speaking of cost, let's talk about the affordability in products that are available right now to entice consumers to buy into what type of insurance vehicles are needed.
Yeah, you're absolutely right with this thing. I think that what clients need to sit down with their brokers and do is to actually look at almost a lifestyle audit. Sit down and say, these things are critical. I can't go to work without a car. Or maybe I can. Maybe I can Uber. Maybe, therefore, I insure my car for third-party cover only, because what you don't want is to go into the back of a Lamborghini and find that you then have to repair that Lamborghini or replace it.
Yep.
You need to look and say, what is critical to my lifestyle? Do I need to have fancy jewelry? If I don't, then don't insure my jewelry for all risks. It doesn't matter then if I lose that. But what do I need to have? I have to have a home to live in. My children have to have a roof over their heads. So what I need to make sure of is that my house, which is quite cheap insurance, is really adequately insured for the rebuilding cost. And your crunch doesn't come when your entire house burns down. Your crunch comes when there's a partial loss. So there's a fire in your kitchen. You can't live in a house without a kitchen. And if your house is not correctly insured, if it's underinsured, So if your house value to rebuild it, not what you can sell it for, but to rebuild it, is 2.5 million rand, and you insure it for 2 million rand only, then you are only going to get paid out proportionately. So you're going to get paid out 20% less than your claim. And that could mean that you can't repair the portion that has been damaged, and you can't live in a damaged house. So I think it really is a time where you need to actively select what you're going to insure, and make sure you insure that properly, and make sure it's the things that you really can't afford to do without. Interestingly, the things that are often stolen or lost or broken, things like cell phones, if you look at those are expensive to insure. So you're paying a lot to insure them. You probably can afford to replace them yourself. And they might or might not even be critical to your lifestyle. Again, cell phones, yes, we all need them now. But you can get fairly easily replaceable cheap cell phone costs. You can enter into contracts which assist you. So let's have that thought process change, not to what am I likely to lose and need to replace, but what can't I do without, which also is the cheaper cover, liability cover. If something goes wrong, you have a fire spread from your property, you don't want to find yourselves owing money because you are liable to pay for something that has gone wrong to someone else.
And it's those types of options and clear decision-making that have really changed the dynamics within the insurance space currently. But to what extent, since COVID-19 as well as the tough economic times that we are in, do we see similarities that are changing the landscape of the insurance sector to balance between what is being offered by service providers and what consumers are looking for?
I think that's always a difficult point, and of course we all know that over COVID-19 there were covers which were given, which insurers had not intended to cover in terms of a pandemic, and that's always difficult for everyone. And I think one needs to look at the sustainability of cover going forward. I think one also needs to, if you look at the covers that were given in terms of the pandemic, I think one also needs to look at saying, have we given too many add-on covers? Should one be going back to basics? And, that's very much what I'm saying here, is let's get back to the real basics of insurance. Let's get back to insuring your bricks and mortar, your things that you can't do without. And I think the same goes for your commercial insurance. One of the things that we have seen over COVID, which is to me quite difficult for clients to understand or even know about, is in the commercial space, because of the long lockdowns, particularly in China, where a lot of our machinery comes from, particularly now if we look at post-COVID, interest rates going up in Europe and inflation in Europe, you're looking at your machinery and equipment costing far more now than what it cost prior to COVID. And I think that's a really important point for clients to interact with their brokers, to chat with their brokers, to make sure that they actually go back to suppliers and get quotes on new equipment, because the machinery that they are now using might well have a replacement value of significantly more than what they anticipate, and significantly more than what they paid for that machinery. And so I think that's the the point that I've seen coming out of the whole COVID situation.
Yeah, and it's going back to basics, like you said. That's where we'll leave it. Infiniti CEO there, that's Sharon Paterson, talking to us about the importance of insurance cover, even in tough economic times. And that's where we leave it on the business desk at this hour.